So there's an old Indonesian saying. It says, "Bersakit sakit dahulu, bersenang senang kemudian." Basically means that he doesn't deserve the sweet, he who hasn't tasted the sour. And that's exactly how I think probably everybody out here on the stage also looks at challenges. Challenges are very integral to every single opportunity. I don't think any opportunity comes easy. And this session is probably going to be looking at the challenges and how we can probably overcome them, these hurdles. So today I have a very, very diverse set of individuals here with me, very experienced owners, investors, developers, builders, brands, and each one of them looks at hospitality from a very different perspective. The intention of this session is going to be try and learn from them and gain from their experience in the Indonesian hospitality market. So, gentlemen, thank you very much for being part of this session. And let's start with probably each one of you talking a bit about what investments you've personally done with your companies in Indonesia and how large they're probably going to be in the next few years. Budi.
Okay, thank you, Shamsher, and ladies and gentlemen, good afternoon. It's good to be here. My name is Budi, Tirtawisata. I represent Panorama Group. We are a company dedicated in the tourism development. We are in 3 business sectors: tourism, transportation, and hospitality. Hospitality is our last arm that we started to grow since 2002, so it's about 13, 14 years old. Anyway, we enter hospitality because we see the prospect of the development of tourism industry in Indonesia, and I think for the last 5 to 8 years we have seen it's going to the right direction, and then for us, we've been investing in some development. We have started to develop our hotel since 2002, and until now we have developed around 12 hotels. We also develop our own hotel management, a separate company, professionally run by independent team. We have got a local management company with some local brands. And we also partner, we have the luxury, the privilege to partner also with Keulen to promote the brand of Radisson and Parking by Radisson in Indonesia for the next 5 to 7 years' time.
How many investments do you see in the future in the Indonesian market?
Investment from the perspective of the tourism industry, I think we are a long-term player. We see things long-term. Yes, there is some economic downturn, economic cycle like what we're seeing now. But I think for us, for everybody who is serious in doing the hospitality investment, you have to take it a bit long-term. And when you see the long-term view, I think we have heard from many gentlemen starting yesterday and today. I think the government, the Indonesian government, and the Indonesian tourism industry is moving toward the right direction.
Okay, I'll come back to
okay.
you in a little while. Erik, let's start with you.
Okay, I represent Whitbread Group PLC, a UK-listed FTSE 100 company. Company currently operates about 700 or so mid-tier hotels. Most of the 700 hotels that we operate are owned by Whitbread PLC, making Whitbread effectively one of the largest hotel owners in the world. The company set out to expand its mid-tier brand primarily in Southeast Asia, effectively 3 years ago, and are currently in the process of opening hotels across Southeast Asia, including a number of hotels which we own ourselves and build ourselves. In Indonesia, we have done our first joint venture, and we are looking to do more investments in Indonesia.
Okay. How many hotels do you see in the next 5 years? Not wishful thinking.
Let's talk about the potential, right? And let's then talk about the number.
Okay.
Let's just.
Ishak.
Okay, my name is Ishak Chandra. I represent the, Sinar Land, the property arm of Sinar Group. And then to understand about Sinar Land is actually we are one of the biggest developer in Indonesia. We own about in top of the land bank, we have more than 10,000 hectares available to develop. And then we have about more than 60 projects done and ongoing. And then also in terms of the market cap, for one of the, we are the biggest market cap in the listed company in the property development under BSDE. We have about, we diversified many projects in all sectors. And then the last four years, one part of our growth strategy, we are going to develop, outside of our core business. As we understand, our Sinar Land core business is actually more the township development. And then also, the trade center development, Strata Mall before, it's about 5 years ago. And then commercial also, and then also, something like golf course and other things. And then the last 4 years, we are going to develop another portfolio. For number one is to diversify our projects to the more to hospitality.
Okay.
What the strategy is actually to improve our recurring income. Number two is actually to extend our footprint in the region, not only in the Greater Jakarta and also in the Jawa Bali.
How many hotels?
Talking about the hotels, basically right now we have about 4 hotels with the land granders, 3 land granders in Jakarta, Balikpapan, in Johor, and then 1 Grand Hyatt in Tamrin. And then
How many more?
malls about, Strata Mall is about...
No. How many more hotels are you looking at? Let's say in the next 5 to 6 years. That's a lot.
Maybe the next 3 years, we are going to build another 3 to 5 years about 7 hotels.
7 hotels?
Yeah, but it's different like we have now. But we're going to more the ultra luxury resort and hotels. Yeah.
Fantastic. Excellent.
And then another one is actually, we just launched also our exhibition, the biggest.
Yes.
We call the ICE, Indonesia Convention Exhibition, the biggest convention and exhibition in Southeast Asia.
Yeah.
It's about 117,000 square meters.
That's something that we'll be coming
Yeah.
down to.
Okay.
Rio.
Thank you.
Yes, good afternoon. Thank you for having me here. I work for Accor for the Malaysia, Indonesia, and Singapore. Malaysia and Singapore region. Indonesia and Malaysia region. And I've actually been with Accor 2.5 years, and we have really not invested in Indonesia yet so far. But one of the things that my superior told me about Indonesia, that Accor is definitely thinking about doing that in the future. Having said that, I think Michael Eisenberg, our CEO for Asia Pacific, yesterday in the session mentioned the fact that 2 years ago we have a new CEO in Paris, our global CEO, who basically split the company into 2. So we are not only going asset light used to be sort of our vision, but now it's been split into 2. Hotel Invest, so we are gearing more towards investment, and then we have of course the management. We have currently we have 90. We're going to hit 100 hotel at the end of the year in
100
Indonesia.
hotels.
100 hotel operating by the end of the year. I think probably we'll hit that, and then we have about 80, 90 hotels that in the pipeline in Indonesia.
Excellent.
So investing is something that quite new, especially in Indonesia. But we did a lot of investment in Australia, in China, in India.
Yes, you've been one of the larger investors across Asia.
Yes.
Thank you, Rio. Suwito.
Hi, my name is Suwito. I'm representing Republik Capital, who I founded, and also Red Planet Hotels Group, Pan-Asian value hotel chain that we actually build, own, and operate ourselves. We currently have about 3,000 plus rooms in the region in 4 countries: Japan, Indonesia, Thailand, and Philippines. And for Indonesia, we have about 1,065 rooms, about 7 hotels. We have 7 hotels in Pekanbaru, Palembang, Jakarta, Bekasi, and then also in Surabaya, Solo, and Makassar. We are planning, unlike other operator, we actually it's all about investment. So we actually own our own hotel. We don't operate for third party. So I think it's more related to the topic as well.
So you have 7 hotels.
We currently have 7 hotels.
And how many more are you going to have in the next, say, next
We are
3 to
planning
4?
to have about 20 more hotels in the next 5 years.
Fantastic.
So we try to get to about maybe about 5,000 rooms.
5,000 rooms?
Yes. Now
Excellent.
currently we have about 1,065 in Indonesia.
Cheers to that. So let's understand then. My next question is basically to try and understand who is putting money in Indonesia right now. I think maybe Erik, you could probably share with us your experience. Who do you see is putting money? Are these first-time owners? Are these real estate companies? Are these funds? What's the quality of the money that's being put into hospitality right now?
I mean, I think considering the nature of the hotel sector at the moment, it's predominantly development, right? So clearly, it's a lot of homegrown, large development groups. It's a lot of people who have made a fortune in a different business and decided to get into the hotel sector. At the moment, it's not really a market where you see investors picking up trading assets. I guess that may be the next phase of the industry. So at the moment, it's predominantly homegrown capital. At the same time, though, I think listening to foreign investors looking at where Indonesia sits as a country relative to the region and relative to global markets, that definitely is an ongoing conversation whether or not to start allocating money to Indonesia, which doesn't mean it's going to be hotels, but certainly there is capital allocation for Indonesia, which I think is quite new, because if you go back a number of years, most of the global funds would typically not have any capital allocation. And obviously, increasingly, we have seen intra-regional investments or parties looking to expand in Indonesia, whether that's purely from a strategic investment perspective or from a real estate opportunistic perspective. But all in all, I think if you look at the pie chart at the moment, the majority is still homegrown capital, which is in many ways not really coming from experienced developers.
So let's say about 70 to 80%.
I don't know what the percentage is, but I think, again, considering the nature of the market, I think a lot of the hotels that are being built in Indonesia today are not built by the very large companies.
Yeah.
Right? It's all private families or families and entrepreneurs. The next phase, the recapitalization, which I think we can talk about, of the industry, I think will attract a lot more institutional capital.
Rio, is that the same that you've also seen?
Yes, I think I definitely agree with that. I came home from the US after spending about 12 years in '91, and then I started Horwath practice when it was 1998. And since then, I've seen that, actually the maturity of the hotel investment market in Indonesia, I think, is going to be dictated by how comfortable foreign investors basically exist in Indonesia. I think currently only the local majority are the local players, and I think it has a lot to do with how people value hotels. I think there's a disparity between how foreign companies value the hotel asset versus the Indonesian. So I think going forward, I think it's very exciting because there's a lot of upside there. And I feel that after watching the market for 15 years, that's where definitely Indonesia is going towards. I think government will play a very important role in making sure that, and over the years, I tend to see the fact that maybe the government is not completely want to open it at one time, sort of slowly, which is fine. Okay? And as the market matures, I think the valuation will become closer between what people outside want and versus what the reality is on the ground.
And who's right normally?
Sorry?
Who's right normally? Is it the owners, their evaluations are right, or the people outside, the funds?
No. I think it's,
Where does the discrepancy come in?
yeah. If you really look at it, I mean, it's not something new. I mean, Indonesia, I think a lot of the developing country in the world has gone through the same thing.
Yes.
Right.
Yes.
And then once it gets developed and one becomes mature, and then people will see it in the same light, kind of thing. So I think that's just a matter of timing.
You've got a fund in. What are your views? How many investment funds are there like yours in the country?
Well, actually, the way we done our investment is almost like a fund. Basically, we have a group of investors putting the money together, and then we invest in these different countries, including Indonesia, where we put 50% of the equity to the project, and then 50% gearing from a local Indonesian bank. So in terms of foreign investment coming in, of course there is a disparity on the valuation, but there's a lot of other ways. I think it's the same as all the country. At the end, is they're looking at the current yield, or whether they want to take a risk of development or not. If they don't want to take a risk of the development, then they have to pay a higher price, right? Because what the local owners have to take all the risk of the development. If they want to come in on the asset yielding, producing assets, I guess they have to pay for the price. So at the end, they have to come to that. But I think, like what other panelists said here, the government is changing the rules, whether the tax rule will change, whether one day we will do a REIT that investors can come into REIT. But for our case, we took the company public last year, which is always possibility open for all the investor that doesn't want to have a direct investment. They want to have a more passive investment. They can also invest through a public company, as we are the only listed value budget in Indonesia, for example. And of course, Budi also have his Panorama, which a potential investor can come through, want to invest in the hospitality business in Indonesia as well. That's probably one of the ways to look at it. If investor want to come in right now, is probably they will come into a mixed-use complex, which is the hotel will be almost like free, and then they're selling the apartments or something like that to see if there is.
Ishak, let me ask you a question. There are a lot of investment opportunities today. I think for money, we've been hearing stories of how Marriott is just about the same valuation as Airbnb, or probably Airbnb is higher than that. Upstarts 5 to 7 years back are now being valued at such high prices. Hotel sector probably looks a bit staid and old in comparison. How would you look at the hospitality sector? What sort of a return expectation should investors have when they invest into the hotel sector in Indonesia? Any perspectives on sort of an IRR return maybe?
Okay, let me answer from the developer side. Basically, for investment things, we always try to achieve minimum about 18% IRR.
18% IRR?
18% IRR minimum. But depends on the situation. Something like this current situation, probably we have to adjust. We have to adjust. Probably could be lower because the IRR also, something like we can get it not only from our recurring income, but also from the upside one, So it's 18% is the minimum we try to achieve.
And in pure play assets, pure play hotel assets, Budi, what do you see?
Say it again?
In pure play hotel assets, what sort of IRRs do you expect from your assets?
Well, I think the same thing with just Ishak just said. But can I go back to the comment from Erik and Rio regarding the fund
Please.
flow? Yeah.
Yes,
So
yes.
I think I agree. In this, look, I think I sat in I joined one of the panel speakers a few years ago, 2 or 3 years ago, and talking about investment fund coming into Indonesia. But I think, there are so many funds trying to get into Indonesia, but the proof is not there yet.
Why not?
So people start to look, but they're not, for whatever reason, they have not chipped in to hospitality investment yet. So I agree with his comment regarding recapitalization of the hospitality industry. It will happen. The valuation will be a bit more compromised later on, and I think you will see a different time of era of recapitalization of the hotel hospitality investments. Yes, it is so far is through our own grown fund. Some of the case, like our case also, we did the Kondo Hotel at the first time of our development to help with the cash flow. But after that, we start to capitalize on our own fund, capital, and also through the bank loan from a local bank. But anyway, what I'm saying, until now, there's also out there investment fund trying to get into Indonesia, but still to the limit of window shopping. So this is the homework, I think, or maybe they're trying to find the right time to buy. Because
How
I
soon
think
do
now
you think they'll be reaching there? And there's probability of oversupply in probably 1 or 2 markets, and maybe, let's say, another...
last year we predict this year is going to happen, but I think we think next year, the next 2 years, I think it's going to, you'll see something more interesting in the hospital investment. That's what I think.
You see the cycle turning a bit, getting ready for...
People are more realistic. Well, hotel is a long-term investment, 8 to 10 years. Yes, I had my own investment. I had 4 years return also I've had already. But you cannot generalize. In general, investment return is around 8 to 10 years, I think.
8 to 10 years? Is that...
Is this a message to your shareholders?
Well, that's what it is.
Okay, I mean, I think the, just generally looking where the sector is at the moment, right? I mean, regardless of whether or not one believes that the long-term potential of Indonesia generally is good in terms of a destination or a place to do business or whatever fundamentals there may be that support that. I think the here and now of the sector, right, is ultimately what's relevant for people if they want to enter the investment, want to invest in hotels in Indonesia. And I think any country generally that has interest rates around 14 to 15% at the moment, structured, in a floating fashion with 6-7 year repayment. In some cases, obviously, the better rated companies obviously have much better terms. They can use a balance sheet, and I get all of that. But just the brand of the people, the majority of the people don't have the big balance sheets, and they go to the bank and they ask for a loan. And clearly, any environment where interest rates are very high and where the terms are generally very compromised, particularly on the back of what you just mentioned, that a typical repayment is anywhere between 8 to 9 years. If you look at the math generally, it doesn't look very good, which is quite a concern. So as a result of that, I don't believe that in the current market, one can actually talk about valuations in Indonesia other than value represents cost, right? Because I'm pretty confident if you would take your cost of borrowing of 14.5%, then you have a 6-7 year repayment schedule, and you calculate your all-in cost of debt, and you start pricing up your equity, you start realizing that actually, if you have that as your discount rate, you're not going to get to a number which is anywhere close to how much you spend on building the asset, right? So clearly, this is not a discussion about, what's the real economic value of an asset. This is really to do with, it's going to cost you so much to build the asset, and subsequently, if you believe somehow that the long-term potential of a location or a market is justifiable, either as a single asset or a strategic investment from a portfolio point of view, then it's probably worthwhile doing. However, going back to the point of recapitalization, clearly I think any capital that comes in from outside Indonesia will start going through the same exercise that I'm going through, right? And the unfortunate reality is that I think anybody who uses their calculator will realize that there may be some challenges. At the same time, though, we see land prices going up, right? Which is, quite frankly, not unusual in the emerging world. We've seen the same in Thailand, we've seen the same in the Philippines right now, everywhere. So despite the fundamentals in terms of cash flow potential, partially affected by the oversupply in some markets and compromising margins because of increased labor costs and utility costs, etc., you still see land prices go up. Whereas in reality, again, if you want to talk valuations, economic values, you would argue the land price should come down, right? Which is obviously not happening. So that obviously makes the conversation a lot more challenging at the same time. So as far as the real opportunity in Indonesia may not necessarily be around picking up hotels that are for sale, because there will be many. I think it really has to do with how the banking community generally start pricing the loans and how interest rates are being, what the trend around interest rates is and how generally property finance is taking shape in this country. I think that will eventually translate into there being a better correlation between replacement costs and economic values. I think until that hasn't happened, I think it's going to be quite difficult for a lot of people to come in and spend a lot of money. So which goes back to your point of a lot of window dressing. People like the idea, see the fundamentals in terms of the sector, but when it comes to taking out the calculator, it becomes a bit of a problem.
It does. It does, though I think you take up the calculator every single time. And we were talking about how land costs have been shooting up, but you still try and maintain it at about 20% of your project cost?
But what we also do is now we are doing more and more build, operate, and transfer, like a BOT or BOO type of projects where we don't actually buy the land. That's the only way to make the number works for us in terms of the returns. And for us, it's all about taking up the bottom line, because our fixed cost is pretty much fixed. So that's how we can get the return that we want, or get the return that our public shareholders looking for, and also maybe one day for the foreign funds.
Okay. Let me just move on from that side a little bit more to something else which I think everybody is banking on, is a large number of people are banking on, is the large domestic market of Indonesia. You'd like to comment on, just to put a sense on how big is that domestic market, which can really afford hospitality or hotels? How big is that? Would you like to be able to, can you put a number to it probably?
Well, I think there was a presentation yesterday, if I'm not mistaken, that outside of Bali, if you take Bali out of the equation, I think 93% I think was mentioned of the market in Indonesia. I think it's particularly it's true for our hotels, okay? So domestic market is. And then I actually yesterday also I asked a question during, maybe it was Erik's session, whereby I said that in Indonesia, actually one of the biggest challenge to get the yield that we want out of the hotel investment is the rates.
Yes.
Okay. Especially, let's take Jakarta and Bali out of it.
Yes.
I mean, if you're talking about secondary, tertiary cities in Indonesia, that's the biggest challenge to make the figure works, especially with the rising land costs. So in order to get that improvement, I think depending on the domestic market alone is going to be tough. The domestic market is not going to drive rates. And I know there was some, the answer to my question, somebody mentioned the fact that, for example, in Bali, the domestic rates actually, the rate that is yielding from the domestic market actually is higher than but I don't think that's necessarily the case everywhere. So if you compare it with Bali versus, other places in Indonesia, secondary, tertiary cities, I think if people go to, the rates are quite low in those markets. So I think the challenge for the government is to open up the market to make sure that, for everybody, not only the government, is to make sure that, foreign market has access to all these markets.
So you see that if I could just kind of turn that around, so you think or you see that the domestic market is at a much lower price point than the foreign travelers?
Well, actually, I think not necessarily I can't generalize.
Okay, not leisure.
Yes,
let's keep leisure aside.
It's very difficult to
aside.
generalize, but yeah, in certain market, definitely, yes.
What price band would you put that under?
Oh, it depends. It depends on the market.
$50 to about just about $110, $120.
Depends.
That's about it.
Also, it depends on. As the Indonesian market matures, even in secondary, tertiary cities, obviously you will have this division of 3 stars or economy hotels, mid-scale, and even upscales. So it will depend on that. But definitely, if you're talking about places like Surabaya, Medan, and Semarang, the band is a lot more. I did a study, an analysis when I was still a consultant, how different, for example, Surabaya market versus versus Bali market. You know, Bali market, the band is like between 3-star hotel, I think at that time, this was like about 6 years ago I did, was like between like, I think $40 or $50 all the way to $250 for an upscale, whereby in Surabaya it's actually between $30 to $90. So that's how big the disparity is, right, you see. So that's what we're playing with here. And the investment cost in Bali versus Surabaya, not necessarily that much difference, right?
Tell me, in your hotels, what are the peculiarities? Just a different sort of a thing. Give us an insight. You know, how different are the Indonesian travelers? What are their different requirements from, let's say, the foreign travelers?
Sorry, can you repeat that?
You know, Indonesian travelers, what are some of their peculiarities? What do they prefer, which is probably very different from what a foreigner would prefer?
I think probably they're getting closer and closer. I mean, we're talking about the younger generation. I mean, internet is very important, you know, the Wi-Fi. I mean, having free Wi-Fi, obviously we offer free Wi-Fi everywhere. Things like that. I mean, obviously the younger generation getting modern, they're foreign educated. So I think the disparity is definitely getting closer versus like 5 to 10 years ago, whereby there's quite a lot of difference. So this is one of the reasons why I think the foreign players like us, like Accor, is in Indonesia, we are getting, before maybe the local players, the independent hotels are actually catering better to the local market. And now you see a lot of these foreign players like Premier and like us, like everybody, you know, coming into Indonesia is catering as well, I would say, or even better to the market of Indonesia.
So you made some changes to your Accor brands, anything that you're looking at changing especially for the Indonesian?
We're definitely adapting. I think we're probably one of the most flexible.
What kind of adaptations, if any, in particular?
Just little things like, you know, having, you know, for example, we have transparent bathroom, you know, and in some places we can't do that, okay, because of the local market and things like that.
Interesting. Okay.
But I think fundamentally the other point is that it's not just saying we adapt the product to the taste of the local market. It's also adapting because, again, there's only so much value coming out of the investment, right? So, and we've experienced that, for instance, where, you know, we looked at the project in somewhere else in Asia Pacific, and we have a number of standards that we apply in the UK, and we found that, listen, from a cost point of view, it just doesn't make any sense. Yes. Right? Whether it's a glass facade or whether it's, you know, the type of toilet that you have or the water treatment plant that you have. So it's not just saying, you know, let's look at what the client wants in terms of the taste. It's also looking at what can we do with the product so that we can build it to a total cost that is more in line with the valuation that's being delivered on the back of the cash flow to the owners who have the property. Right? I think clearly with there being pressure on top line and bottom line, there is a need to be far more creative and perhaps pragmatic or flexible in order to get people to continue to build hotels. Right?
I agree. I think to be a good player in a market like Indonesia or anywhere else, you need to be mindful of the fact that, you know, you can provide a good return to the owners, obviously. Yes.
Budi, would you agree with that? Are the brands really being accommodating enough to the requirements of the local developers, the local requirements?
Say again your question.
Do you think that the brands are they adapting fast enough and enough? Are they giving enough flexibility for the developers in Indonesia?
Brands of hotels?
Yes.
Yes, I see. Well, you see every hotel company, hotel operators now, they launch different brands to cater for different market.
Yeah.
Not only the international operators, but the local operators, the national operators also are trying to catch that market. You know, whether it's a luxury or mid-market or even the economy hotels or value hotels, what you call it. You know, with design to cater for millennials, for example, because I think each brand will have its own habitat, will have its own market.
So you're happy with the brands? They're doing enough they're providing enough flexibility for the developers?
I think so.
Yeah?
I think so.
Great.
Maybe too much.
Yeah? So let's come down to the next pet of challenges, the government. Yeah. We just heard about something very interesting about all quotations now being in the Indonesian rupiah. What are the impacts of that? Have you felt any? Suwito, you'd like to answer that?
For our case, it's not impacting that much because 97% of our guests are actually Indonesian.
Okay.
So I think for the economy value hotel, it doesn't impact that much. I think it's more probably impacting the 5-star of the resort places like Bali will be impacting more than for the local chain hotel like ours.
So no real problems from anything like that?
Maybe the problem is actually for certain player or developer is starting to develop. Because right now, the US dollar is more than 14,000 in everything. And then some of the costs, for development is actually we have to spend in US dollars. And then in return, it's basically we will receive later on probably in rupiah. But for the existing one, probably there is no impact. But for the new one, probably there's an impact. That make the sense something like go to the decision yes or no, or we have to hold, or we have to start now. There's an impact for the people or for the developer is in the development phases. And then let me to add something else, something like this is for the hint also for certain operator when dealing with the developer, especially like dealing the developer like Sinar or let's say like other developer that is actually focused to the development side, because development and investment is a different game. Development is actually is a simple money, quick money, and then probably we're talking about the margin. One is talking about the yield. Another one is for development, talking about IRR probably more than 20%. Even our IRR for development, even more than 30%. And then when we talking about the investment, the IRR going to 18%. Even not only for the operator, even for the management, to convince the shareholder to invest in the hotel or for the product, for producing recurring income is quite difficult, especially right now. Cash is the king. So I believe, for certain operator dealing with the developer like us, probably having is a bit tough, because the decision is talking about, hey, we need cash. Investment is longer, in fact, taking longer. And then right now, we need cash. So that's the difficulty, when we make this, when you approach the developer like us, like the Sinar, because 80%, 85% the income is from development. Easy money, 20 million, 30 million bank. For the investment, it's a long.
Yeah, especially the convention center. I mean, that's like an investment which is...
Yeah. That's when come up with the decision. That's why, that's really difficult when you deal with the developer, the big developer like Sinar or let's say something like other developer like focus to the development side. Yeah.
But that explains why most big developers don't do hotels, right? It's about going in, going out, as you said, right? It's recycling of capital. It's not about tying it into hotels.
It's about the strategy, because that's why, like the Sinar land, even 87, we just have 13% recurring income. And then for this kind of situation, we need the recurring income. Yeah, that's why I agree. This is talking about the strategy. We have to balance, the recurring and the development. But for certain people, certain shareholder, even for my boss, I really certain times are difficult to explain. Hey, you have to invest like we invest for our eyes. It's a 4 trillion investment, and then when we can pay back.
Yeah, absolutely.
And then even the IRR, okay, not even 18%. It's about strategic project, right?
No, it's great actually that you have the pockets and you have the vision to probably invest in something like that. I wonder whether that's the same strategy and which even brands are adopting, that they are going asset light and they are exiting all their hotel assets and just going and looking at managing other people's properties. So.
I think fundamentally, though, cinemas is a very different player. Right? I mean, they're a publicly traded company. Their stock is being priced on earnings. It's nothing to do with the guy down the street who builds a Premier Inn, right? It's a different guy, right? So, of course, a lot of developers in Indonesia, but also in Thailand, Malaysia, they have a portfolio which comprises predominantly development of commercial or residential townships, And they have this notion that we need to get recurring income because that's a way of mitigating risk. In other words, they're talking to the shareholders and thereby retaining or increasing stock price rather than is that really what they want to do with capital. Right? But that's a very different conversation from, Whitbread PLC investing into a hotel.
Fair. No, I was just...
so let's make sure we separate the conversation because it gets confusing otherwise.
Yeah. Actually, coming back to your point on the impact of the currency itself, how's the devaluation of the IDR over the past 3 years, how's that been impacting your project costs?
Okay.
I mean, I understand. Are you being able to source a lot of, let's say, talent and equipment and material from Indonesia itself, or do you need to import a lot of it, and that's probably been impacted by the currency's devaluation?
So far for us, it's actually since something like we have the volume, we have the certain MOU, with the suppliers, especially for the import one. But in a certain period, probably they cannot provide based on the MOU again. Since something like the price, the exchange rate is, it's quite high, the US dollars. Yeah. But starting now, I think so far now, since something like our focus still in the township development, residential, and then the major cost of the import product is not so big, not like the hotel, investment, whatever. So it's not really give the high impact.
Suwito, how have you seen your project costs vary over the past?
I actually predicting the construction cost to be lower this year and next year actually, because steel price going down, cement price going down. So we actually thinking for the construction of the new hotel will be cheaper for the next couple of years probably.
I think it's also great you have a very clean model which you are...
Yeah, we are very standard model. We are like, we can actually do it modularly whenever it's allowed. We are in a discussion to do that, so that we can actually zip the whole room and just put it like a Lego.
And are you being able to source literally everything from Indonesia itself?
Yeah, we can. Everything is basically from Indonesia.
Anything that comes in from outside?
No.
Most of all, everything here?
Everything is here.
Let me add, for construction, it is now, it's a trade-off between the currency, depreciation of rupiah. But then for construction, you're right. It's actually, if not going a little bit down, it's flat for construction. I mean, steel, cement, and everything. However, there will be some increase in the mechanical engineering and plumbing for some certain materials that is being imported. For example, for lift, elevator, escalators, for example, if you need, there will be some impact. But I've not also got a real number how much increase actually from a total project, because now it's still, everything is still ongoing.
No, it's great. I mean, if you're looking at, sorry, we just got 3 minutes remaining. So we just got, I mean, if it's flat, I think that's a pretty good idea.
But just one thing, right?
Please.
Construction cost or superstructure cost, right, may well be consistent or flat, whatever you call it. Land prices still go up. So your overall cost still goes up, right? And it's not so much whether you procure domestically, it's about what are you procuring. Because if you're buying an item of which certain items have to be procured by the supplier locally, they have to get those items from overseas, the currency is still going to have an impact on the price that you're going to pay, right? Yeah. The other thing is that, which we have seen certainly the last, let's say, 2 years, is that you have projects that start, and there is an agreement with the main contractor on a certain price, and as the project progresses, as certain cost items go up, whether it's labor cost or some other items, you gradually see the margins of the contractors, the main contractors, being squeezed.
Fair.
Right? Which typically means you've got to compensate them,
Yeah.
right? Because otherwise you end up in a situation where the main contractor goes bankrupt, right? Which is also happening a lot, you see. So still the cost will go up, you see, and the timeline will increase, which also means project cost goes up.
How easy have you found it to be to deal with the Indonesian owners?
I think it makes any difference whether it's Indonesia, Thailand, Malaysia, India.
Yeah.
I think it's all the same.
Yes.
I think I think anything you do in an emerging market is something that you need to do with your eyes open and be prepared that whatever you assume as your original cost is going to go up at 10, 20%. Not necessarily because the items that you want to have in the project or have gone up in price. It's just generally it takes a little bit longer to get from A to B. And that's something you need to be aware of, right? But I don't think Indonesia in particular is different or more difficult or less difficult than any other place, right? And I think we as an organization can say that because we are, as you know, developing our own projects in India, where it takes 5 years to build a 100-room hotel.
Yes.
So
That's pretty horrible. Let me just, I think the time's up. Last point. Tell me one, if there was a, sort of a magic wand with which we could wipe out all the challenges. Tell me your biggest challenge that you would see, each one of you, the biggest challenge that you see which you would like to see wished away, if you may. Whoever wants to start.
The biggest challenge?
Your biggest challenge which you, in Indonesia, in hospitality, which you would like wished away.
Which I like to?
Just remove it radically.
anything.
Anything.
To me, is to get the project completed on time. That's the biggest challenge.
Okay, adding to that, I like that one also,
Yeah?
is I think clearly reduction in interest rates, right? And a very simple permitting process.
Permit process?
Yeah. Okay. Very simple permit process.
Ishak, how about you?
I think from the developer side, more is our government
Sorry?
regulation. The government regulation is the big challenge now. Especially, the last 2 years, the market is so soft, and then not supposed the government making like the regulation that make everyone difficult. Like in our side, like the LTV, the tax, regulation, and everything makes even the demand even slowing down. So for us, it's a regulation.
Rio, how about you?
Well, as a developer, one of the things that having so many hotels already in Indonesia, my challenge is, I don't necessarily want it to go away necessarily, but it's a challenge nevertheless, is educating a lot of new first-time developer hotels that I encounter, right? So basically, we need to educate, right? I mean, I have one story whereby somebody came to me and says, I'm going to develop a hotel the first time. And he's saying in his line of business, I forgot what it was, 6 months is the return on investment. Okay, you came to the wrong place. So this is the type of thing that I encounter. But I think it's just normal, but it's interesting.
How about you, sir?
Oh, I agree with most of the panelists that the regulation is key, especially in Jakarta, where our next 10 hotels will be. Then there's a big challenge with the Jakarta government right now in order to get the permits, and they have to get their act together before we can even process our permits. So that's one thing.
Okay, great. Unfortunately, the time's up. So thank you very much.
Thank you.
Thanks a lot.
Thank you.
Very much.